cut that was expected between Saudi and Russia initially, that was about 1.5 million barrels, wouldn't have tilted any balance considering the big drop in demand, the sharp drop in demand as a result of COVID-19. We're talking about 25 to 35 million barrels of excess supply today in the market, actually yesterday in the market. And that cut that just came now was trying to temper down that kind of mismatch between supply and demand. So if you look at things in perspective, I do not believe that cut was a big mistake. On the other hand, if you look at, so it's also not about Saudi only. There's also the Russian that has a big say in this one. And there was also a potential theory that the Russians also were considering getting the shale producer out of the market on the long run. But once you see the Fed's action and how...
Fadi, honey, we got to negative prices. I mean, something that's completely unheard of. Frankly, something that this part of the world, maybe not Saudi Arabia, but I can tell you sitting right here in the UAE, nobody was very happy about how we've seen this situation play out. I mean, negative prices. And you're going to tell me they didn't make a big mistake? That the Saudi energy minister didn't blow it here?
It is not a supply mistake. It is actually a big demand shock, and it's also a WTI negative price. It's not a Brent, so it's also a U.S. shale-related and storage-related as well to an extent, in addition to some, how you say, long cover, what they call a long covering, long squeeze, if you want, on inventory as well that happened. So it was not about a demand supply, whether you cut an extra million or 2 or 5 million. It would not have made any difference for that on that day. I think there's a big misconception on the WTI movement that day as a result of supply. Supply cuts would have not made any difference to this.